Talk after the meeting. Okay, good morning, everyone. Let's call the November 8th meeting of the retirement system to order. Item number 2 on our agenda is to approve the minutes of the meeting of October 11th, 2018. I have a motion and a second on item 2. All in favor? All opposed? Motion carries. Item 3 is to ratify approvals. I have a motion and a second on item 3. All in favor? All opposed? Motion carries. Item 4 is to approve the claims docket. I have a motion and a second on item 4. All in favor? Aye. All opposed? Motion carries. Item 5 is to approve the following applications for service retirement. We have 3 applications. I have a motion and a second on item 5. All in favor? Aye. All opposed? Motion carries. Item 6 is to receive the report of death, authorize the payment of the $5,000 death benefit, and authorize the Secretary to make necessary changes to conform on the following. We have 2. I have a motion and a second on item 6. All in favor? Aye. All opposed? Motion carries. Item 7 is to receive the report of death, authorize Secretary to make necessary changes to conform on the following. 1 case. Second. I have a motion and a second on item 7. All in favor? Aye. All opposed? Motion carries. Item 8 is to approve the following application of vested rights. We have 5 applications.
Mr. Chairman,
yes,
there's some corrections that need to be made in the case numbers.
Okay.
All of them, instead of being 3-5, it should be 3-4 on all of them.
Okay.
Like 3-4-5-3, 3-4-5-4, 3-4-5-5, 3-4-5-6, and 3-4-5-7.
Okay.
So move the items as
Thank you.
I have a motion and a second on item 8 as amended. All in favor? Aye. All opposed? Motion carries. Item 9 is items for individual consideration. Item 9A is the ERS pay plan effective July 2018. Just point of information, this is consistent with the cost of living adjustments and pay plan adjustments that were approved by the City Council for the management employees, the general pay plan employees earlier this year. So this is just the standard revision to the ERS pay plan for FY 18-19. I have a motion and a second on item 9A. All in favor? Aye. All opposed? Motion carries. Item 9B is to accept the settlement under the Deutsche Bank LIBOR AG settlement action and authorize the chairman to execute settlement documents. I just have one question. When I was looking at that this morning, it seems that the total settlement is $213,350,000. Oh, I'm sorry, 213 million. I need to open my eyes. $213,350,000. Do we know what our piece of that is? Just
I thought it said in here.
did it? Does it? Okay, I apologize.
I thought it was around $23,000 or something like that.
Okay.
Well, you said around 23,000.
Pardon?
You said approximately 23,000. Did you say approximately 23,000? Is that okay?
What page are you looking at? Oh, it's right on page 2? Yeah. Oh, figures.
I did consult with the Oklahoma Attorney General's office, who handled this on behalf of the state pension plans, and they believe the settlement is fair and is all we're going to get.
Okay.
So I'd recommend that you authorize the execution of the documents to be settled.
Okay. Any additional questions on item 9B? Hearing none, I'll entertain a motion. Have a motion, a second on item 9B. All in favor? All opposed? Motion carries. Item 10 is investment consultant report. Good morning.
Good morning. Change things up a little bit, look at some different things. We have the quarterly report and the October ASAP. Obviously, we've seen a lot of volatility in the markets in October. The difference between October and September is really dramatic, but we've moved back a little bit in the last couple days as markets have gone up. But if you would, on the monthly report, turn to the last page, the second to last page. We have indices report there, and you'll just see just how bad the month of October was across the board. Within the U.S., S&P 500 was down about 7%, 6.8%. That's the very top. That's just the month of October. Small cap stocks, as measured by the Russell 2000, were down almost 11%, 10.86%. We did see so a lot of the turnover in the market was these growth stocks, the more momentum players that had been really moving up throughout the year. They lagged in the month. They sold off more. I shouldn't say they lagged. They sold off quite a bit more in value while still down, outperformed a little bit. We've been, it's normal to see corrections in the market, as Dennis pointed out, and we saw this in February, a similar pullback. But as many of you may have heard, if you were at the Public Funds Conference, there was a lot of talk about where we are in the cycle, just being late in the cycle. And I'll just turn in the quarterly book, turn to page 26, because I think this is important to keep in mind. Where we are and where we've been the last 10 years. So on page 26 of the quarterly book in the lower left, we have a 10-year growth of $1. And this really starts, it's probably June of 08. So beginning of, prior to the major sell-off in September of 08, but at a point in time when the markets were beginning to sell off. And you can see what this is showing, $1 invested, $1 of pension assets invested at that point in time went down by 20%, so you had 80 cents. And since that point in time, $1 invested is worth almost $2.20 at the end of September of 2018. And there's been a few blips along the way, but we haven't had that big correction. And we know those things happen. So I think it's important to keep in mind how strong markets have been when we look at where we are today. Overall, your portfolio is not immune to market corrections. We have the portfolio is structured in a way that long-term you do have some insurance built in to provide volatility protection in challenging equity market environments. You have protection built in to help against rising interest rates, and the PAMCO hedge fund strategy has helped on that side more so than what we're seeing from the long-short equity. And that, just a word of, it's not caution, but in a sell-off like the month of October, when it's that dramatic and that quick, you're not necessarily going to see the impact on a relative basis of that insurance show up so much in a one-month number. In fact, the October numbers, because this meeting is so early, we don't have the hedge fund numbers in here because it's still early. While they protected, they weren't down as much. Your portfolio is still down a bit. And I think, just put it in dollar terms, I was looking, the end of October value of the overall fund is $706 million. At the end of September, you were at $746 million. So it's about a $40 million decline in the month. Now we're up a little bit in the last few days. Major issues impacting markets, just where we are in the economic cycle, concerns about trade war, strong dollar. Moving into the midterm, October is generally a difficult month when you have in election years. That said, we don't put a lot of stock in that elections are going to change the fundamentals in the market, except I think the market reacted yesterday. Investors like certainty, and so there's more certainty today that very little is going to happen going forward in terms of new legislation. So that may have been why we saw the bounce yesterday. Today, the Fed meets today. What the talking points are, we don't expect the Fed to raise rates today, more likely next month. The data is probably still supportive of that. But that could have an impact on the markets. I had an interesting conversation with a European manager yesterday, the biggest thing hanging over markets right now, in addition to valuations, is just the U.S.-China trade concerns. And really indicating that what they're looking for as a non-U.S. manager or global manager is an agreement. It doesn't matter what the agreement is, if it's good for one side or the other, just an agreement to provide some certainty as to areas where they can invest. All that said, where we are today, we think expectations going forward are much more muted than what you've seen the last 10 years. If we look at, staying on page 26, in the upper right, you see your 10-year return. The 10-year return of the portfolio is now over 8%. So this is, we haven't seen a 10-year return over 8% in some time. We don't think that's likely over the next 10 years, just because of where we are today. Our intermediate return assumptions for a portfolio like this are probably more in the 6.5 to low 7 range. So this has been a very good period. If we go back a few pages, to page 21, we show 5 and 10-year. These are portfolio objectives relative to your, or portfolio results relative to your policy objectives, and they're all yes on a 5 and 10-year basis. It's not too often that we have, page 21, I'm sorry. Is it 23? Yeah, I'm sorry, page 23. So you'll see all yeses here. It's not too often that we have all yeses. Now that said, you've done some things just in plan design and expectation, lowering your hurdle rate to 7.1. That makes it, that expectation a little bit, or that objective a little bit more realistic to achieve going forward. But that said, we still, in the next several years, it may be challenging to get there. As far as any manager issues, at this point, no concerns on managers. And we're looking at closely watching some things. Emerging markets have continued to be challenging, to say the least. From our near-term outlook, however, we're still neutral on all equities, large cap, small cap, international, and emerging. And what that means is our expectation for the next 12 to 18 months is that those should meet our intermediate term assumptions as opposed to being below. So valuations are okay. Valuations have come in a bit because we were more negative as valuations were a bit higher. On the fixed income side, we're a bit more negative on spread sectors, so high yield, non-U.S. There, you do have managers that have the ability to navigate that, to be more tactical. The Western strategy is moving in and out of certain sectors. They've really brought down their non-U.S., non-dollar exposure. Brandywine does have a pretty significant amount there, but they're actually also moving down their non-U.S. exposure, moving more into U.S. So they're able to navigate that to some degree for you. And then continue to look to hedge funds to provide some protection. The hedge fund portfolio fully invested. And one thing just to note, so there's no confusion, if you look on the page 3 of the monthly report, you'll see both K2 Mauna Kea and K2 Overseas Fund. There's no returns because of how early in the month this meeting is and getting this report done, but those will be coming in. We did better than long-only equities, but still probably down slightly. The Overseas Fund, that holdback, this is just referencing, you may recall, there's a 10% audit holdback that they hold back until their audit is completed. So that is going to be reflected here probably until sometime mid-2019. That is not earning a return, but it's not participating in market movement either way. So that's what that is. That's $7 million. That's that holdback. So you'll see that reflected here. Just wanted to point that out. Other than that, no recommended changes at this time. We'll just continue to monitor things closely and stick to the plan.
I have one question, Jason. Any comments regarding our core real estate holdings? It appears we're slightly over our maximum percentage.
Yeah, the overall target in real estate is 15%. Part of that is we're not, the core real estate has moved up and you're underweight to opportunistic real estate, which is private real estate. So we're comfortable. Right. There's no concern there as we look at that. Part of it is what I was saying, that your opportunistic real estate's at 87 basis points weight, and your target is 4. So you're so far underweight there. Just from a policy standpoint, we would not recommend redeeming and bringing that down. But perhaps, I don't, just from a policy addressing that, maybe, I don't know, either we expand the range or I don't know if the board acknowledges that, but maybe it's best if we come back next month with some language in the policy to address that. Because you're not going to get the opportunistic real estate up to 4 anytime soon. Because those are the private market funds that call down capital over time, and it's way underweight. So those are in the policy. So as they're written in the policy, that you're reading it correctly. But from a investment risk standpoint, based on what we've got, the other issues we have being underweight, I think it would be okay to modify that. And we can do it like we've done. I think there's language of the private equity that the unallocated or the uninvested part of the private equity may be invested in your long-only equities. That would push those over their targets. There's language like that in the policy, so we should probably do that on the real estate. Yes. Yes.
So on those funds, we're measuring here what's actually invested, right? What's been called and committed?
Yes.
I mean, not just committed, but what's been called.
No, not what's committed, what's been
called.
What's called and
Okay.
invested.
Okay.
Not just called, what's currently invested. So if you go to page 6 in the ASAP, you've got $15 million in commitments. They've drawn $8.2 million, and the current adjusted ending value is $6.1 million for those two real estate funds, TA and the Sigler Guff Distress Fund. So that $6.1 million is what's showing up in the opportunistic real estate, representing 87 basis points of exposure, which is over 3% underweight. But that's a good, we'll address that in the policy. Any other questions?
Thank you, sir. Okay, item number 11 is comments from,
I
I'm
do want to
sorry.
point out,
Yes.
the amount that we're getting from the settlement is $26,387.33.
So noted. Thank you, sir. Okay, item number 11 is comments from board, staff, and citizens. I just got one comment. I've received some feedback from a handful of the members on Renee's evaluation, which we will do an annual evaluation this year to avoid the large gap that we experienced last year. So if you could get me some comments by the end of next week, that would be great. Anyone else? We are adjourned at 10:23.